Just as Grace has grown, changed, and expanded as a community and campus over the generations, so have ways of giving to Grace. The backbone of supporting our annual operating budget has always been our annual stewardship campaign or pledge drive. We discern what we want to give for the coming year and commit to this through completing a pledge card. As with other charities, the actual contributions we make during the year are tax deductible. This year is no exception, and we are now beginning the Grace Stewardship Campaign for 2021. Over the past several years, the number of ways to give to charitable organizations has increased significantly, making it possible to give annually in ways that may have additional tax benefits to the donor. As we evolve as a parish, we'd like to introduce you to a couple of different options to support Grace annually. One of those options is establishing a donor advised fund, or DAF. It may sound complicated, but it's really pretty straightforward. You simply first set up a donor advised fund with a qualified organization of your choice, such as your brokerage firm, Fidelity, Charles Schwab, or the Episcopal Church Foundation, just to name a few. You then transfer assets into the donor-advised funds, such as appreciated stocks. At the time of the transfer, the stock in this case is sold and then reinvested in one of the DAF established options. Once the assets are in the DAF, you, the donor, determine the amount, the qualified charity, and the timing of your grant or grants you'd like to make. There's some tax benefits to DAFs. The first is that no capital gains tax is paid by you on the appreciated assets transferred into the DAF. Secondly, gifts are deductible in the year that you transfer the assets into the DAF, not the year that you make the grant to the charity. The amount in the DAF is invested as you choose from options provided by the DAF, and they can continue to appreciate without capital gains taxes to you prior to your grants. Another way to give annually is with a required minimum distribution, or RMD, from your 401k account. At age 72, you must begin taking distributions from your 401k, which are determined by the IRS based on the amounts you have in your IRA as well as your age. Required minimum distributions are taxed as income since the money was not taxed at the time you put it in the 401k. However, if your RMD is directed to a charitable organization, such as Grace, it does not count towards your taxable income. The key is that the RMD has to go directly from your 401k account to the charity. Your broker can execute the transaction and the required paperwork at your request. The donor-advised funds and the RMDs are tools we wanted you to know about as we begin our stewardship campaign. You may be able to use these to make an annual gift for 2021 rather than the traditional pledge method. Your financial advisor or accountant is the best one to let you know if either of these work for you, since we at Grace are not qualified to give financial advice. If you plan to give this way, please note that on the stewardship card here, not in the pledge section, so we can include your gift intention in the budgeting process.